I don't know what's going on. It will not let me go live. Okay, I found a way to go live. I've missed this live stream almost, but not entirely. I have never missed a live stream on YouTube. It has been over 5 years. We've got 250 weeks of never missing a YouTube live. I don't know what the fuck's going on, but it won't let me turn my phone. It says your orientation is locked. Please rotate your device. It will not let you rotate your device. So I don't know if you guys can even hear me right now, but I just got back from a walk with my family. I was out with the kids. We're having a great time. And I'm like, oh, shoot, it's Wednesday. And I rushed home and it's like 7:40. And so I ran downstairs, didn't have time to prep or anything, but I want to talk a little bit with you guys about real estate and whatever else. Can you guys see me right now? Someone tell me in the chat, if I rotate this, like I normally have it, can you see me? It says orientation locked. Please rotate your device. This is retarded. What is wrong with this stupid app? YouTube's the worst sometimes. Can you guys, if I turn my phone like this, can you guys see me? Does it turn? It says, I can't see the screen at all. It says, please rotate your device back. Can you guys see me? Is it all screwed up? And I put it back in the tripod and I have it sideways like this. It says, your device is locked. So I can't see myself. I can't see the chat. I don't even know if I'm live right now. I can see the chat in a small window in the corner. So I don't know why, but the device will not stream normally. I'm stuck like this today. Fuck you, YouTube. This is what I get for buying a brand new iPhone, you know? It's like, fucking Apple. Anyway, I didn't want to miss this stream because I never missed one before. We're gonna make this work. Sideways or not, I'm not missing a stream. Never missed one yet. I'm not gonna miss one. I have no idea. I've never adjusted my portrait mode, so possibly my kids play with my phone all the time. Maybe that's the issue. It won't let me go into the other mode. It says YouTube does not accept the other mode. So I don't know what's going on. And that says portrait lock. So maybe there's a way to go to my settings and change that. I don't know how to do that on the fly here live, but I could try. Okay, so where are we? I've been buying a lot of buildings. I've been putting a lot of offers in. I've been examining a lot of buildings. Nothing seems to cash flow right now. Like it's crazy. We currently, I'm actively pursuing under contract a 16 unit. We firmed up on a 23 unit and now another 18 unit. And I'm looking at another 50 unit as well. So hopefully about 100 units flown in into the new portfolio. So disposing of a whole bunch of small stuff, buying bigger stuff. Really excited to redeploy my net worth into assets that I have control over where I can make a lot of money in the next bull run. So I'm super excited for it. Can you guys see me okay? Like, is it really weird right now? Is the screen like super shrunk down? I don't know. You used to be in the old days when I was starting streaming that you couldn't actually do a stream the Instagram style. So it's stuck on the Instagram, portrait mode. So I can't turn it like YouTube normally is the widescreen and Instagram is like this. And it's stuck on Instagram mode. I don't know how I did that, if my kids did that. I don't know. But I do have a second iPhone 13 as a backup, my old iPhone 13 that I could run and grab and plug in. I don't know. Whatever. We're here. We're live. It'll be a quick stream. I'm here because something that I try to do is honor my word with everything that I can. And I completely forgot about this stream, but I promised everyone and myself that I would go on every single week, no matter what, without fail, between 7 and 8:30 live every Wednesday. And it's usually at 7 p.m. I start, and I usually end by 8 p.m. But today is going to be a shorter stream, and we started late. It was like 7:50. And beyond the fact that I was already forgotten about it, there's also the fact that and by the way, for the half a dozen people who have sent me DMs, I got home from the walk, turned on my phone. Everyone's like, dude, where are you? It's the Wise Wealth Show. It's the YouTube Mike Rosehart Show. Like, where's the Mike Rosehart Live? And I'm like, oh, oops. I was busy today, negotiating real deals, getting stuff done. I'm leaving for Florida tomorrow morning. So we're getting things ready for the house sitter and all that kind of stuff that has to get done. It's definitely one of those things where, you're getting busy and you're caught up in a whole bunch of things going on. You just don't even get a chance to remember all the things you have to do. And this was the last thing that I'd forgotten about. Next Wednesday, I'll be in Florida. I'll still be there. It'll be a week from now, but I'll still be there. I'm leaving at 4 or 5 in the morning. Got someone here to house sit, and then off we go. And we got some business to take care of down there. I'm looking at some big buildings, and we're selling off some of our smaller stuff. So I'm kind of coordinating a lot of that stuff just to dispose of those smaller assets. Doing the same thing here. Let's go to the Q&A real quick. Interest rates are now 9%. No one can afford. Well, the real rates are like 5, like the Fed funds rates. But yeah, obviously those rates are like getting close to that anyway. Yeah, I wish I knew how to fix it for you guys, but I really don't. Really do not know how to do that. Is there a way to adjust the rotation? Now, sorry guys, I'm not sure how to adjust that the rotation. So we're just gonna deal with a crappy stream tonight. Like if I just try to turn this right now, it's like no, your orientation is still locked. I don't know how to do that. There's an easy way. I tried to do the pull down there and see if it was on my pull down menu, but it's not. I'm not going to the settings and messing around with that right now. The goal is to get the stream done. So today's stream might not get a lot of views. Whatever. Yes, I'm buying 250 units. If you haven't been following around, Mike Rosehart is redeploying probably 3/4 of my net worth into real estate. It's technically in real estate now, but I'm recalling any mortgages that I have out, any loans that I have out. I feel much better controlling the building, controlling the asset. It is safer technically being in a first position than being in equity with my own building. But with my own building, despite being in a higher risk position, I can hold through this recession and I can be a good operator. I can ensure profitability where I can't ensure the operators that I'm lending to are going to be as good as I am. So anyway, one of the struggles that I'm going through right now is just redeploying net worth and stopping trading as well. I've gone all in on the index, so it's nice and been relaxing. It sucked yesterday. Today was great. You watch the volatility. When you have a large portfolio like I do, a 1 or 2% rip on the S&P 500 or the Nasdaq can sometimes mean 6-figure jumps in your net worth on the day, right? So that kind of volatility, it sucks. And in real estate, you don't check your prices every day. Like I don't check if my building's worth $3 million or 3.1 or 2.9. And even if I wanted to, I couldn't. There isn't an active price. The building's worth between one appraiser might say 2.5, another appraiser says 3.5. They differ wildly because it's subjective art, not a science. And 2 appraisers come back from different firms and have totally different valuations for the same building, depending on the assumptions that they made on that building's cash flow and the comparables that they decided to use. So it's definitely one of those things where, I like that in a lot of ways, the illiquidity gives you safety. And at my level, I was talking about this with my wife and talking about this with a couple of friends the other day. And it's like, what? Some days when I'm having really bad stock days and I'm down 150 grand or 200 grand, or like we're having, something bad happens in the lending and you're stuck and you're like, what happens to that money? You don't have control. You have to sue them for it. In those uncertainty moments, the amount of stress associated with the volatility of crypto or stocks, in those moments, I feel like I have less control and I feel like I have less freedom than I had over my money when I had a quarter as much as I have now. You go back 7 years ago, I still had $1 million or $2 million. I was fine. I was happier in some senses than I am now, right? And so that was like an epiphany for me. It's like, well, if I was happier with a portfolio of real estate, it's like maybe I need to make the shift back. Not only that, but I can make way, way more into the next bull run. Like there's a real opportunity here to, potentially acquire, if I acquire 250 units, that's like between a 25 and 50 million portfolio, that could become worth 75 million. So there's a 25 million upside right there, just holding that for 5 years. And that's just turning over the tenancies, improving the buildings. Small stuff makes big differences. So someone put some questions here about the 9% rates. Totally true. Rates are making things very difficult. Not much cash flows at 9%. Now, there's a lot of stuff you can assume. I'm looking at a deal right now. We're looking at assuming a 1.29% mortgage. It's good till still 2025. And so where I can take stuff over and take over that, it can make a lot of sense. So it just depends is the answer. It depends. It's shrunk a bit horizontally. Yeah, sorry guys. Wish I could solve that for you, but not on the stream, I don't think. I'll try. Towards the end, I'll give it a shot. I'll pause the video and I'll go into my settings. If someone posts how to do it, how to unlock my portrait mode real quick, I'll try. Okay. Dominic says, yes, how's it going, Mike? Do you need a contract to do a BRRRR strategy or can you do it without a contract? So I think we're talking about like the agreement of purchase and sale. You have to buy a property to do a BRRRR. A BRRRR is the buy, renovate, and then refinance, rent it out and then refinance the strategy, right? It's like a flip, but you keep it tax-free, pull out of your capital. The idea behind the BRRRR is a fantastic one. You definitely need the asset to do it. If you're talking about like contracts, as far as like with your contractor, I would recommend contracts. I've often just done a cowboy handshake, verbal, text, email, very simple contracts. I've never gotten into like the more complicated contracts, but that's just because the guys that are really affordable, who do the work at reasonable prices, they don't want to do contracts. The guys who do all the T's and I's dotted and proper invoices, they charge double. You know, the same job, they're going to charge $100,000 for the basement. I can get it done for 40, but I get it done with guys who might not show up. I get it done with all those struggles, right? And so that's just the business that I've run myself in, is just to keep costs low. I'm stuck with guys that might not show up, you know, tomorrow. They might get another job. They might go out drinking and not show up. That's part of it. And that's why they work for $25 an hour instead of the guy who has someone full-time doing his quoting and all of his invoicing. And he has that overhead of paying those staff. And so he has to charge double just to break even. And so that's where the big difference is. I like companies that don't have big overhead. And that comes with the lack of, I guess, professionalism that comes with it, that allows you to have a really good quality burr. Thanks, Ethan. Interest rates, do you appreciate transparency, Mike? Benefited a lot from your experiences. Thank you, Tristan. A lot of people have said that like, and I've gotten so many messages over the years, and lately not as many. You know, I could use some right now. They feel really good when people send me messages like, hey, over the last 6 years, I bought my first property because of you. I'm a millionaire because of you. Or at least, you know, some of your videos have been following along and getting nuggets of information. That feels good. It feels like, hey, I'm doing this for a good reason, because Lord knows I don't get paid well to do this. It's charity, right? But the payment is seeing you guys, you know, improve, and seeing you guys grow, and the network that we can build and what we can do together with that network. Because there's going to be opportunities, I think, big time in the next 6 to 12 months. Where do you park cash? Where do you wait for opportunities? So I think I answered that question in part, but you could just park it. Like, one place you could park it nearly risk-free is you could buy spreads way out of the money that limit your downside risk. And those will often pay like 1% a month if you close them on extreme red days, only in the long direction. You're taking a haircut on stuff you're selling. Totally. Yeah, everything that I'm selling at deep discounts. I've taken, like, on the Muskoka's cottage, it's like a $680,000 property. We're going to probably clear it out in the 300s. On some of my Sarnia rentals, taking 10% off. They're like 1% real cash flow properties. We're going to dump them off. Again, they rent for $3,800 a month. They're $360,000 properties. They cash flow. Even at 9% interest, even at 10% interest, they cash flow. So that stuff, I don't need to sell it, but I want to sell it because it's small. And I don't want any more small deals. I want big deals centered with quality, operational control, where I can put a property manager in place that can do a couple hundred units. I'm not going to get there with small buildings. So I just have to shift my focus and dump anything that doesn't fit that focus. And so for me, it's like, of course I want to get the optimal amount per property, but I don't really care. It's more about time. Like, sure, I could list it myself. I could market it really well. I could focus on get everything renovated perfectly and looking mint, and like get the grass and landscaping right, and like sell it to a home buyer and get like maybe $399 for the property. But I'm just as happy to get $370, 20 grand. What's my time worth? That's 30 hours of my time to coordinate that wholesale. I don't care. Let an investor pick it up. They can get 20, 30 grand, whatever. If I have to finance the deal a little bit, you know, lend the second mortgage at 20% or something, totally fine with that too. It's okay. You know, like I'm not focused on a couple of dollars here and there. I'm focused on, one, freeing up capital, because I have a lot of capital trapped in these deals, and then redeploying that capital with leverage. Leverage is going to be my best friend through this recession. I'm going to use it to be able to acquire, like, you can take hypothetically $1 million, take $1 million and you can buy $5 million in real estate at 20% down, right? So I can go buy $5 million in real estate by levering. And I have a hard time levering a small portfolio. The bank doesn't want to lend on a duplex. They don't want to lend on a 5-bedroom student rental. They will. They'll lend to 5 or 10 properties. But if I want to go buy 250 units, I need to clear all the debt in my name. I start buying commercial stuff where the debt qualifies based on the building, each one in a corporation. And it doesn't matter. Like, I have to have personal guarantees. I have to show high net worth. I have to show that I'm a good operator and I have a history of good operation. But beyond that, the building does most of the qualifying. And so I can continue to get mortgages unlimited. I could borrow $1 billion in mortgages. Whereas with the smaller deals, you get capped out on what you can do. So I need to pass these small deals on like a torch to someone who's just doing their first deal, their second deal, their fifth deal. They can take these deals on, small 1% rule deals. They have better percentages. Like that building I'm selling, I'll probably sell at a 9 cap. And then I'll go and buy something that's a 6 or 7 cap. You're like, why do that, Mike? Well, because I get operational control and I get economies of scale. And the financing is better that I can get. So it ends up being worth it to go down in cap rate, much bigger building. I get better economies of scale and I actually make more money at the end of the day. And when I have these buildings that are 300 that become worth 400, I just said buildings are worth 3 million that become 4 million or 5 million. You know what I mean? There's a clearer path to profit with economies of scale and more control over the process. And so I feel much better rebalancing my portfolio in that way. Bum, bum. Any advice on starting out in this current market with high rates? It is difficult. So Joseph, just be very careful, Joe. It's, I would say that find properties that cash flow and find ways to be nuanced about it so that they do cash flow. There are several properties I've looked at where like I could furnish it and rent it out monthly, and all of a sudden the rent goes up 20%, and now the numbers work. Or I could rent it out as a student rental, and it's got say it has 4 rooms, and then the basement's unfinished. I can throw 2 more bedrooms in the basement. There's 6 bedrooms. If market rent is $700 a bedroom, 6 times 7 is $4,200. Now it's a single family house that rents for $2,000, but by the bedroom to students, I can clear $4,200 a month. All of a sudden the numbers start working when I pay $400,000 for that property. It's 1% rule. It's generating 1% a month. It can cover a 12% mortgage if it had to, right? Just back of the envelope, quick math, right? Like quick gut check is like 1% rule is an easy one. That's 12% annual return. As long as the ROA or return on asset is generating enough to cover the debt service, you're mint. The other thing is that rates are going to fall. Shit's going to break soon. If you guys have seen the jobs data, the JOLTS report that came out recently in the last week, the economy is suffering. We are entering stagflation. So the economy is now in zero and getting ready to go into negative growth, while at the same time inflation is still high. So what happens when the economy goes into recession? That's the rock in the hard place. That's coming. Once they go into recession, government stimulates and bails out, which is basically a money printer going brrr, solves problems, because when you put money into the system, what does that do to asset prices? Raises them up. The other thing that will probably happen is they'll ease up on rates. So those are the 2 options. Either they stimulate or they ease up on rates. And they probably will ease up on rates into next year. But they have to talk dirty to us until the moment they pivot. So the day before they're going to pivot, they have to be like, no, we're not going to pivot until all investor confidence is that the economy's in the shitter and inflation's coming down. And once those expectations, inflation expectations are become anchored again, because they're a little bit unanchored. People are like, holy shit, gas prices are going crazy. Commodities are spiking right now. The 5-year yield, the bond yields right now are like 20-year highs. The market is almost pricing in like the next 10 years of rates being this high. They're wrong. They're going to the other side. Before I think the market was like, hey, everything's going to be over by 2023. I said they were wrong. They're starting to panic now, and I think they're wrong the other way. They were too optimistic, and now they're getting too pessimistic. And so things will come back into balance this spring, and there'll be opportunities, I think. It is also possible that we get a double bounce. So the spring we bounce again, and then we go further next winter. And 2025 December is the actual bottom. Possible for real estate. Real estate does lag. So real estate tends to follow commodity prices, but most importantly, it follows the inverse of mortgage rates, which is led by bond yields. And bond yields are spiking. And so real estate inverses bond yields. So as bond yields continue to spike, a 3 to 6 month lag or 1 to 6 month lag, real estate prices should fall. So we should see prices continue to fall, which is again why I need to get cash ready. And I need to dump properties so I can buy other properties. And I understand that I've started to buy buildings. You're like, Mike, you just bought a 23 unit building. You just bought another 16 unit under contract. You're looking at a bunch more. Why? And it's like, because they're good enough deals that when I zoom 5 years out, I feel really good buying now. Even if prices fall another 5 or 10%, I don't care. If it has strong cash flow and it can weather any stress testing, I want to own that asset. I don't know if I can find that same asset 6 months from now. Even if things fall 5 or 10%, I might not be able to find a deal as good as this 23 unit that I just bought, as an example. So I'm always buying, I'm always looking at deals. It's just that 8 out of 10 deals I probably see, or 9 out of 10 deals don't work. I run the numbers and it's like, no, they're shitty. So just run your numbers and continue to look at deals. I love boutique hotels. I'm going hard into the boutique hotel space. I like that you can buy them vacant. I like that you can run them as monthly rentals if you want to, as furnished rentals. You don't have the LTB hanging over your head, the landlord tenant board. You don't have the RTA against you. I also love newer built stuff. If I can buy a shitty building and there's a piece of land where I can build more units and I can do that affordably, as a developer where I have cash flow from the one building and there's an adjacent parcel. So if you guys know of any opportunities, send them my way. I'll pay you a wholesale fee, referral fee. Anyway, so those types of opportunities, you can build something in 2018, there are no rent controls here in Ontario on anything built after 2018. So if rent is $2,000 a month on a building built in 2019, if the tenant now is being delinquent or having issues, you say, hey, your rent's no longer $2,000, it's $5,000 a month. And that's lawful. You can just jump the rent to $5,000, pay it or get the fuck out. And they have to. You can serve them, you can evict them, no problem. Easy peasy. So non-rent controlled units are huge value. So there's a space there in Ontario. A lot of people don't know about that. They think the landlord tenant board is so bad. It's like, well, what about new buildings? What about anything built in the last 4 years? All those buildings, 5 years, all those buildings, 2018 and newer, are not rent controlled. That's an opportunity potentially, right? So don't look at things as a blanket statement. Look at how can I make this work in the environment. And the reason I like Ontario is because, again, I have the network here. I know a lot of people here. I have a lot of connections. It's easy for me to do deals here. But I will continue to do deals in Florida, and I want to build out the infrastructure there. I think that the numbers work better in Florida, but I also like here as well. I think the immigration trends are also strong in Florida. There's a good case for appreciation for Ontario in the next 5 years. Har says, do you have $1 million? Yes. More than $1 million. Stickman Finance, more than $1 million liquid right now. Stickman Finance says, what do you think about starting a bookkeeping business? It's not something I would do, but if you need the money, you can make like 30, 40 bucks as a bookkeeper. If you built out, a portfolio of bookkeepers and you made a spread on all of them and built a business out of it, it's a business like any other. I think, yeah, could be good. Could be good for sure. How do you develop an edge? How do you develop a way to be competitively, what is your thing that makes you better than other bookkeepers? So that's the question I guess you have to ask yourself, because I want to have a moat around my business and I want to be special in some way. I want to have an advantage, a competitive edge or a competitive advantage over someone else. So what is that KSF? What is that key success factor that you bring to the business that others don't? So yeah, love your shirt. So I went there, man. Oh yeah, the JW. I love the JW. We go there almost every year. It's a favorite for me. I love the JW Rosehart. It's up in Muskokas. It's like 20 minutes from that cottage that I'm selling. It's like less than 20 minutes away from Lake Rosseau. This cottage I'm selling in the 300s. It's a full season home in the 300,000s. It's a beautiful 3-bedroom cottage, 12-foot ceilings. I'm surprised it hasn't sold. I should price drop it. I think it's on MLS for like $460 or something. But I would take like high threes, and I would even probably second mortgage finance it if someone wanted to take that deal on and run Airbnb there. I love the area. Like the JW Rosseau is one of my favorite hotels in the whole world. It's a fantastic, the Marriott hotel there is a fantastic hotel. They have the inside-outside pool. You can swim out, and in the winter it's cool. In the summer, they have so many great amenities too. It's a big fan. Next one was real estate market is a lot less efficient and you're able to optimize. 100% true. I'm competing against people who are mom and pop, who are 55 years old and never used a computer. In the stock world, I'm competing against bots and PhDs, some of the smartest people in the world who have insider information and have whole teams working behind them, and they work 16 hours a day. In real estate, people don't work that hard. And so when you work really hard in real estate, you climb to the top really quick. It's easy to, and you're competing against realtors with bubblegum licenses who went to high school, and their high school economics is the closest they come to understanding, net operating income statement. A lot of them anyway. In the large multi-space, you start dealing with more professionals, but in the smaller space, when you're first getting started, it's like, man, you're competing against like Joe Blow and like Sarah Loblaw or whatever, like some random person. Just made those names up. Okay, do a cold call for content. A cold call. So cold call would be the idea of like, I think you're talking about finding deals. So what I would do, like it depends on the space you're in, but one of the ways that you can drum up multifamily business is you go in and look for all the stuff that's sold in the last 10 years. And the agents know the buyers and the sellers. So, and you can find sellers too. You can go look them up and call them. Say, hey, I see you own this building. Do you have any interest in selling? It's like, no. Okay, no problem. Go on to the next person, talk to them, build up a conversation, build some rapport, continue to talk to them, follow up. One of those people who bought in the last 10 years is going to want to sell, especially now. There are a lot of investors who are like, they're on a mortgage that was at 2%, now they're at 8%. Maybe this property has a good mortgage on it, but their other two are suffering. And so you can get in there and provide the liquidity they need through a creative solution. Like maybe they have no equity in that deal right now. Maybe they have 95% loan to value CMHC multifamily financing. And the building has fallen in value to the point where the mortgage is worth more than the building. You're like, hey, I'll still give you some cash because I want to buy that mortgage. That mortgage has value. And I'll buy that right to assume that mortgage off you for a couple $100,000 and solve your problems at the other building so you can keep holding that building. And so you can get creative with people, right? But it comes down to just talking. Just literally, like, you don't even have to be good at cold calling. Just go and talk to people and say, hey, this is who I am. This is what I do. Just letting you know, if you come across an opportunity like this, give me a call and then follow up. Say, hey, it's Mike Rosehart again. How you doing? I haven't talked to you in 6 months. Have you thought of any opportunities that meet X, Y, and Z buy box? And you send them your buy box. Your buy box is the things you're looking for in a deal. So be very specific. Like as an example, I always look for vendor financing. I have a certain price per unit that I want to pay, a certain cap rate. I look for buildings that meet certain metrics. And so you describe what you're looking for. And then when they come across a deal like that, they're like, oh shit, that meets Mike's buy box. And subconsciously they're going to want to call me. And they call me and we make a deal. And so you have to get in the back of all these agents' minds, all these wholesalers' minds, and start talking to owners directly too. And when they think to sell, they'll call you. And if you don't want the building, you might know someone who does, and you get a referral fee. So it doesn't hurt to ever call people. Boom, Thoughts on upcoming winter market. It's going to be bad, I think. Although like most of the pain is in. So when I say bad, I mean it's not going to appreciate. We're going to have some depreciation. That said, I think the real opportunity is that people will be hurting. So the motivated sellers will be way more motivated than they've ever been. And there's no buyer to come in. There are, but there's less buyers to come in and solve the problems. So before, like last year, the year before that, the year before that, the year before that, going back to 2017, for the last like 6 years, there's always been another buyer scooping in. I'm competing. I'm always competing with my offers. Now there's no one competing. It's dead quiet. And I can really put the screws into them. I'm like, sorry, these are the terms I want, and there's no one else, so take it or leave it. And they say, I'm not going to take that. And they call you back, and they're like, actually, I'm going to take that. So that's the nice thing about a buyer's market is you can really negotiate the terms that you want, make the deal how you want it to be. So I'm excited for that. And maybe average price doesn't fall that much in Ontario. I think maybe another 5 or 10%. Things they're mostly priced in, and I think it's going to get better into the spring, but there's going to be a lot of opportunity to negotiate, and that's what I'm really excited about. So will prices fall on average and median all that much more? I don't think so. They've already fallen 25, 30%, maybe a little bit more, but the real thing is that there's opportunity to negotiate where you couldn't before. It's a full buyer's market. So get the terms that you want in your deal. So you're buying flooring. I would just buy a good quality flooring. Don't cheap out there because you're going to get bad, the seams buckle and stuff. It's not good. You want good quality flooring. People can tell the difference. Spend a little bit on some good quality stuff. If you can get a deal on it, I'm all for that. You get $4 stuff for $2.99 or $2.49, sweet, you know? But don't go and buy the $2 stuff at regular price. Like that stuff's garbage. Which locations in Canada do you like for real estate? I like where I understand and I touch. So London, Sarnia, areas where I'm familiar. I'm now becoming familiar with Florida too. So, you know, the whole east coast of Florida, I'm hunting for deals as well. You made all money in small fix and flips. Going in a new field seems like an overreaction to a few failed flips. No, definitely not. So I'm having tons of success in the flip space too. It's just multifamily is the exact same thing. Like I literally can go into, it's such a negative mindset. And you might be hurting right now. And I'm sorry if you are one of the people who's hurting through this. And a lot of real estate investors are hurting right now. And they are finding that there's not good margin. But the nice thing about I've always flipped small multifamily. So duplex, triplex, fourplex. So I can do one unit and rent the next unit, do the next unit and rent it. The nice thing about multifamily is instead of a 3 or 4 unit or 5 unit or 6 unit, I've done a 7 unit before, same thing. A 23 unit is the same thing as the 7 unit. I did a 7 unit that had 5 bedrooms in every unit. I had 30 tenants rented by the bedroom. Same thing in a 23 unit building. There's almost no difference. So it's not like I'm really changing my model, so to speak. We're still getting in and we're going and renovating all the units. We're still getting in and doing all new floors, new paint, cleaning it up, and then we're renting it out. And the nice thing about multifamily flipping, so to speak, which maybe you could argue I am multifamily flipping. I'm going in, I'm changing all the tenancies out, I'm making everything really, really nice, then I'm bringing the rents up to double. And I'm furnishing it, I'm running it as a nice building. Once it's turnkey, I go back to the bag, they see it's worth double. Because literally this 23 unit I'm buying, it would worth double when I'm done with it. And so I'll have a double. And instead of it going from a $300,000 house to a $500,000 house, it's going to become, a $2 million building to a $4 million building, right? And then you're in a position where you got the same margin, but way more money is made on a bigger deal. And not only that, but like when I'm doing a fourplex and I bring a flooring guy in there, he'll give me a deal on the flooring. But if I would give him 23 units, he'll install the flooring for 80 cents a square. I can get 23 bathrooms done so quick. Like it's just such a better business. And then also, if we do go into a prolonged recession and you're flipping stuff that isn't multifamily, you're screwed. I dabbled into cottages a little bit just because, again, like my dad wanted to buy a couple cottages. I bought them with him. We renovated them. He lived there. A lot of it was emotional, what I was doing. And there is financial behind it. Cottage market has collapsed 30, 40%. I bought some of these smart enough, like the one cottage that we're selling is worth $685. We bought it for $192. So I'm all in maybe under $300. I will still make a profit, even if I'm selling it for 40% less than what it's worth or what it was worth 3 months ago. It's okay. Like if you buy smart enough, you have enough margin, it's okay. The same is true in multifamily, but in multifamily, your flips take 2 years because you've got to get all tenants out. It's a long process to turn these buildings around. But it's like buying a business. You go into this business and they're poorly run. They have crackhead tenants, bad property management, deferred maintenance. Like nothing is done well in these buildings. They're all mom and pop owned. You get in there and you do a really good job and you make it a tight management operation and you do everything really well, you bring expenses down, you get everything super efficient, you get efficient ductless units in for your heating and cooling, you bring your utilities way down, you put LED light bulbs in, low flow, toilets and faucets, and good tenants don't waste utilities either. And all of a sudden, your building expenses, utilities go, some of these buildings have like $10,000 a month in utilities, and you can drop that to $4,000 or $5,000. So there's $5,000 more in your pocket every month. But not only that, buildings sell at 5 cap. So if you can bring the expenses down $5,000 a month, that's $60,000 a year. Things trade at 20 times that. So the value of the building just went up, not $60,000, you're getting $60,000 more in your pocket a year on that one change of making things more efficient, adding some insulation, whatever, to getting your building more efficient and driving those utility costs down. But that goes right to your net operating income. And the way that multifamily buildings are valued is only by a multiple of net operating income. And it's roughly about 20 times net operating income, a 5 cap rate. If you reverse that as 20 times. So if you add $60,000 just from that utility change, your $60,000 multiply it by 20. What'd you just do to your building? You just added over $1 million in value to your building, right? It's like 1.2 million or something. So that's money in your pocket. And then even if the market doesn't recognize that value right away, let's say, things get really bad, we go into the worst recession ever, rates stay super high, and so everything goes to like a 6 or a 7 cap. And so now the multiple you're gonna get is 15 times that amount. It's like, oh darn, I only made 600,000 improvements by doing that. And maybe there's no buyer for you right now. That's okay, because I'm buying buildings that are generating 2% rule. So they're generating, if I own them in cash, they generate 24% annually. Forget appreciation, forget the value of the building is, 24%. Now I apply leverage to that, I put a mortgage on it. My ROI is 100, 150%. We're gonna get 100% return on my down payment. Tell me a place where I have almost no risk. When I buy these buildings and they're worth 3-4 million and my mortgage is at $1.5 million and I just created all this equity, if the market collapses 10, 20, 30%, I don't care. I'm still above water. I still have equity there and I'm collecting cash every month. So those kinds of bigger buildings where I can finance and get CMHC financing, it's fantastic. You can go 95% loan to value. Canadian government subsidizes you on large multifamily. You can put 5% down on large multifamily and the building qualifies, not you personally. You can get as many mortgages as you want, as long as you have, I think, 25% net worth comparatively to what you're borrowing from them, which is nothing. It's super easy. So for me, it's a no-brainer. It's the only way I'm going to scale to 1,000 units. It would be so hard. And I've done maybe 140 properties. So I've probably made $15 million or something doing small deals. If I had done big deals, if I had pivoted 6 years ago to big deals, I'd have an extra 20, 30 million. And when I had that epiphany, I'm like, holy shit, why am I doing what I'm doing on a small scale? Do it on a bigger scale. And if I'm wrong and I can't get the values that I want and the market falls apart completely, I still have cash flow and I win. And over 10 years, guess what happens to those buildings? They appreciate some more too. Inflation carries you to new heights and the debts that you have are fixed. Well, inflation carries the value of the asset up. So the gap between what you owe and what the building's worth just rises over time. So you just win again, but you gotta buy really strong cash flowing assets. And that's the secret. So for me, I'm not flipping anything small. I will still flip big deals, but it's not flipping. That's the business of multifamily. You're buying little building businesses and you're combining them. You buy 10 building businesses in an area, all of a sudden you have a big business in that area. You get $1 million a month in rent roll. That's my goal right now. $1 million a month in rent roll. Your net isn't $1 million. Sure, you're making 100 or 200,000 after all your expenses, but that's a big business where you can get a lot of economies of scale and get efficiency. That's what I'm aiming for. Or I can drive management expense down to like 4% of rent collected, where I can get real efficiencies of scale, and that's the goal. All right. I already explained that question. I answered that question. Basically answered that already too. How do you learn what you know? Experience, talking to people, a lot of failure. Like I bought my first property at 19, right? And it was a big renovation project and I learned a lot. I was an idiot. I didn't know what I didn't know. And I still have a lot of things that I learn every day, right? You continue to learn, and that's how you got to analyze each step, but you can't be afraid to keep pushing, keep going. So yeah. Thoughts on BlackRock, crypto mining. Again, like I think crypto mining is a great business to be in. If you can invest in Bitcoin for the long term, I think that it's a safe place to park some capital. But again, small percentage of your portfolio, like 3 to 5% in something like Bitcoin mining. Don't go all in on it, right? Yeah. Grinder says your short on BMO was spot on. You should have shorted the TSX, bro. Yeah, I called out on my stories 4 different occasions. BMO, Bank of Montreal. I was talking to so many lenders and everyone's like, BMO's dried up. BMO's funding no mortgages. And I talked to private banking and I was like, And I talked to a few other people who I knew in the business, and I'm like, how's BMO doing? Like, we're not lending at all. Bank of Montreal, one of the 5 big banks in Canada, has stopped real estate lending entirely. No lending. And their auto business, done. They fired everyone, they closed down their auto loans. They're not lending for houses, no real estate, and no car loans. How is that going, like, what is that saying to the market when a big bank stops lending entirely? It says they have a bad book of business and lack of liquidity. It means the default rates that are going to be coming out that they have in front of them, they're forecasting some nasty dark shit. And so I said, and everyone's like, don't short the big banks, Mike, that's a stupid gamble. And it's been down 11% in 3 weeks since I made that call. If you had shorted that, it'd be 1,000% return if you put some option contracts on that. Do what you want. I make a lot of really great calls. I'm not good at executing in the stock market. It's very hard to execute well, to know when to get in and when to get out. And it's just the stress associated with it too. Like, even if you have good analysis, it's like, man, I don't know. It's, I like in real estate where I create a thesis, I get data to support it, and I win almost every time. And when I lose, it's like it's my fault. Like I've lost in a couple flips, no doubt. Like I've probably lost on 5% of, less than, more recently, I would say, probably 10% of flips recently, 0% in the bull market. But if you adjust for the appreciation, I probably lost on 10% of my projects. And so 9 out of 10 are home, like, you do well. You get 2 that are home runs, 7 that you make some money on, and 2 that you, after factoring in opportunity cost and carrying cost, you might have made some money on your money, but your money was better off invested elsewhere. And it's like, those I consider fails. So if my flip doesn't generate on my cash 10%, I consider that a fail. And so that's like my threshold, my hurdle, and that happens. You have a bad contractor who doesn't finish the work on time. The flip goes on for 6 months. You have a guy who steals all your materials. That's happened to me before. You have, JV problems where one partner had a divorce and was like, I'm done. I can't fund the deal. And it's like, well, that was the deal. You were supposed to be funding it. And so shit happens, right? Life happens. People fuck you. It's a people business and things happen. The market crashes 25%. And if you didn't buy smart enough, that might mean all your profit is gone because market fluctuation. And that happens. I mean, you could hedge against that. There are ways to actually short the real estate market in a stock account while you're flipping. So if you're smart, you just buy hedges to protect against market fluctuations. And so if the market does fall between now and then, you don't care. You have protection in place. And so that's a smart way to run a business. I've done some of that. It's hard to execute that effectively though, right? It's easier said than done, so to speak. So anyway, that's it for tonight. I went way over my time. I put my kids to bed. At least I didn't miss tonight's stream. Is in a weird orientation. I'm sorry for that, but at least we're here. At least I never missed Wise Wealth. Sorry, it's called the Mike Rosehart Live Show now. It's not called the Wise Wealth Show anymore, but it used to be called Wise Wealth Wednesdays. But I haven't missed one now. I can say that I've never missed one. So, yeah. People say, well, says, you remind me of first flip when I learned to check for municipalities for termite inspections, caught off guard, but I opened a few walls. Totally. Things will happen. Sometimes you buy a deal and like you had no idea, there was no way to tell. There was no droppings of termites and you find termites. Or sometimes you open up a wall and you're like, oh shit, there's no support here. These walls have been cut. These main joists are cut. The only way to fix them is to take all the drywall down and sister them front to back, unless you're a scumbag and you hide it, which like that isn't the way that I would do it. Ideally, I try to avoid, whenever I used to flip, I would try to avoid opening walls if I can. So if you buy other people's problems and you don't know about them, that's the best way to do it. Don't open the walls up, don't find out. In a lot of cases, like just do the paint and floors, move on. So anyway, if you're gonna flip, guys, try to stick to cosmetic flips. Don't get into the really hard stuff where you're tearing apart buildings and like there's a lot of risk there, takes a long time, profit margins are thin. You don't wanna be a builder. Builders don't make great margins. It's a very low margin business. It's a tough business. Developers are getting crushed by carrying costs. Almost no developers are making money right now. You want to buy buildings that cash flow to cover all of your debt. If your building can't cover all of the debt payments and then put money in your pocket, it's the wrong building, sell the building. If you can't refinance your building today at current market rates, up to 80% loan to value or whatever in that range, whatever you can qualify for, 75% loan to value, and it can't cash flow, sell the building off. If it's too small of a building and you're ready to elevate, sell the building off. If you have a strategy change, you can sell your business. Real estate's a business. Anyway, guys, thanks so much for watching, everyone. I appreciate everybody who tuned in tonight. And remember, the secret to unlocking wealth through you is 3 levers to control your financial future: spend less, earn more, and maximize returns. The difference. See you guys in the replay. And if you do me a favor, hit the like button. It's like clapping after a presentation. And the other cool thing you could do is you could make a Facebook post or an Instagram post and cheer me on and say something positive and tag me, and I will re-tag you on my stuff. So if anyone wants to do that, I would love that kind of stuff. I miss those posts where people are sharing the appreciation stuff. It means a lot. It's like the currency that I'm operating in right now. All right, everyone. We'll see you next week. And you know where to find me at Mike Rosehart on Instagram and on YouTube. You're watching me, so you found me here. And on Facebook at Mike Rosehart as well. There's a blue check mark on all of those. I guess YouTube doesn't have blue check mark, so not on YouTube. But yeah, you guys know where to find me at rosehartcapital@gmail.com. Thanks, guys.